Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening of Wednesday, the 3rd of September, 2025, and the time 5:40 p.m. Central Time. So, in the markets, you're waffling now in the stock indices. I had a signal tonight to get, in fact, on the close today, to get out of any longs that were remaining in the Russell. And that's because the momentum, the slow stochastic, was lost, and I'll show you that in a minute. I think that people are starting now, just now, to say maybe we take a bit of money off the table in the metals if they've caught this play. They may not, they may, I don't know. Dollar down a little bit, but currency's mixed. Why? Well, let's go to the news of the day, and maybe that'll explain it for tomorrow. First, you had the JOLTS report today. You lost 300,000 job offerings. That's a lot. So why? Are the employers full? Are they scared of what tariffs are still going to bring? AI? There's many things, but a weakening and not putting out the jobs. They don't want to hire as many right now. There's some seasonality in that because, we're going into the colder months now. The Challenger Group is going to come out with their corporate, and that's going to be important. Corporate plan job cuts last month were 62,000. Bigger or smaller number going to come up. ADP. So now we're going to get the private sector net job change data. All right. They're looking for 75,000 new jobs, which by any stretch is a good amount. However, that'd be down from the July gain of 104,000. Weekly jobless claims at 730. All right. Remember, the more claims you get, continuing and regular, weekly, that is bearish the market in the sense that, which way do I mean? In the sense that people aren't getting as many jobs and it's harder to find them. The market, though, will look at that as friendly. I know it sounds nuts, but it means the Fed gets the go-ahead. Oh, the job market's weakening. The Fed's going to cut rates come mid-September. How many times are you going to keep discounting that? The July trade deficit also comes out at 730. And by the way, that's a wild number. What if Trump loses all these tariff wars that he's in terms of the court battles? That's what I'm talking about. I don't know. I don't know if the courts will or won't give them. I don't know what fallback plans there are for Plan A, Plan B, but they're going to be there. And those tariffs are not going away easy or quiet. But you do realize if the president goes to the bathroom, a Democrat wants to sue him for violating the bathroom. So anything the man does is a lawsuit. In Chicago, now they're already talking maybe they don't send in the Federal Reserve as much as they do. They instead send in ICE. We have the Spanish Independence Day coming up. Chicago's got a monstrous Mexican and Latin American population. And with that, the ICE are going to be out there, and already the mayor and the city, the police cannot help you if you get detained by them. We won't step in, but we won't help ICE. I mean, it's all over the news here. ISM August service data at 9 o'clock. Now, another thing that I want you to take advantage of before we get into this market talk right now is our sale's going to end tomorrow. And, I get some wise guy to go, Ira, well, you're always talking this sale. Well, how do you think I do these shows, okay? It takes money to produce these. So it's my advice. You don't get my advice here. You're getting my overview of a market. You don't hear me say, go out and buy this, put a stop there, do this. I do that through here. And we're taking it for Labor Day week, which ends tomorrow. It will end tomorrow. And it's a third off on any of my research. So you get 3 months, think about it, for the price of 2. You get 33% off my courses also. So the full charting course, and then the 2 auxiliary that go on top of that are the Bollinger Bands, where I explain slow stochastics and Bollinger Bands and outside days, which are super, super, super important. All of that there, it's at iraepstein.com. Just click up here at any time, you'll see the cursor. So let's go into the market and finish up with that right now. And let me see if I can get myself back right where I want to be. There we are. All right. I never have help in here, so it's always me doing that. So let's go to the chart action and just talk that. For the week so far, because we're already in the Thursday trade, you're down 0.25%. You cannot say that the market has fallen apart in any manner. It's still very close to all-time highs. You see that when you go to a regular daily chart, and you see how close you are to all that. But this is a consolidation phase now, because you've got a higher high and low. You have absolutely, on my work, stepped out of an uptrend. You're not in a downtrend. You're in no trend. You're spinning your wheels again right here. And we've been doing that for a while. Don't lose sight that as history goes, September's typically not the best month. On the other hand, in the past, we didn't have tariffs. In the past, how many times were you coming into a September meeting for a series of rate cuts? Go to your Season X. You get that on our website. And pot in, when you get the product from them, go Fed rate cuts. And it'll show you all the different ones and what the different markets might have done with them. When you look at the S&P 500, take a look at that 18-day average. That's the neutral number. You're absolutely neutral, just hanging at that. You see it here when you got the Bollinger Bands. You're in the middle of sort of a sideways action, and momentum has been coming down, and it's no longer overbought. That's what's important. In the NASDAQ, it's a similar picture. You got a higher high and a lower low. There's really nothing that I can say about that. The Dow fell back to support at the 18-day average. Isn't it magical how markets go to these numbers right there and it likes to stop at it? I see so many people use a 20-day or a 21. The 18 fits better than those, in my opinion. When you look at the Russell, this is what I don't like. You've now seen a market that first flirted with losing the embedded reading yesterday. It kept it by the hair of its chinny chin by not closing under 79. Today it closed under 79, and tonight it's even dropping a little bit more. So the odds favor, that's all I can tell you what the odds favor. When you lose momentum, that before you go up and make the most recent high, you're going to make a run for wherever that 18-day average is, or the closest moving average. In the DAX, you fell one more day, and now you've hit the 100-day average and the Bollinger Band in very oversold territory. Again, this market's also worried what's going to happen with interest rates, because like in the U.S., the long-term rates in Germany and other countries definitively going higher. 10-year yield in Chicago, okay, I call it Chicago. We got today to the 422 level. Are we ever going to get under 4 is the question that everybody's asking themselves. And because this affects mortgage rates, that's the thing that we're all looking at. What does that do? In the 2-year notes, you're still coming up. The market is here nicely going into the jobs report. None of these are embedded. In the dollar index, you are still caught in that sideways action and still caught in the flip-flop of it in the euro. So the dollar trying to go up, the euro trying to come down, and neither going anywhere at this point. The British pound came down again, challenged 2 days, the lower Bollinger Band, and getting a pop back tonight as I'd expect, but it too is sort of caught in that sideways action right there. Then we get to the SEP Bitcoin, which lost the bearish embeddedness in it that it was having. So I can make an argument before it comes down here. I think it'll get to wherever the 18-day average is. In the crude oil market, we're now hearing that OPEC is talking, maybe they are going to increase production. Remember, we don't know what the months going into the end of the year look like. Maybe they're going to increase those now. 2 delegates have said that is on the table. That brought the energy markets right back down today, be it WTI, Brent. But from my point of view, all they did is get up to the 200-day average, the upper Bollinger Band, and they failed there. And that's exactly what I teach in my charting course. You learn how to work with the moving averages. Rebob gasoline backing off, still in an uptrend, higher lows, higher highs. Would you buy Bollinger Bands? Not me. You can do it. And I thought you could make a run when you lost the bearish embedded reading here. We even said yesterday, could it run to the upper Bollinger Band? It's done it. I don't look for a lot more from this market right now. I am no longer in the bear camp. I just haven't joined the bull camp from a Bollinger Band point of view in an overbought market. So you put it all together, you try to come up with a game plan for yourself, and each and every morning I give you one. First thing, I'm recording at 6 in the morning. The futures update typically. By 9, I'm well at work recording the Spider ETF. I always do the Spider ETF later because it opens number 1 at 8:30 Chicago time. Number 2, I want that first half hour of trade. I want the money from the prelim markets to get in, and generally we get a number of government reports, and once they come out, I'm ready to go. So I hope you join me with that. With the icons here, I'm Ira. I'll catch up with you tomorrow or in the updates tonight as you look at the other ones that I've done. You have a great evening.